Time now to take a look at the latest business news, and we're going to start with a new assessment of how that new coronavirus outbreak is impacting the Chinese economy. To tell us all, we're joined on set by our business editor, Stephen Carroll. Stephen.
Eve, we've had a slew of warnings from companies in different sectors about what sort of impact the virus outbreak has had on them. But this time around, one of the major ratings agencies has given a broader assessment of the effects that it's calculated on the world's second largest economy. S&P Global Ratings looked at how much Chinese growth might slow down depending on when the virus peaks. It says that if next month is the peak in cases, it expects growth in the Chinese economy to slow to 5% this year. But if that peak is in April, growth could fall as low as 4.4%. Growth in 2019 was just over 6%. Now, the big issue that S&P has identified in its report is the risk to the financial sector. It says that there could be an increase in what are called non-performing loans, bad loans in Chinese banks of up to €1 trillion if the outbreak continues into April. And that would put major strain on the Chinese financial system. Beijing already taking steps to tackle this, cutting a key lending rate in its financial system, but that may not be enough to alleviate the strain that Chinese banks will face. As I was saying, more companies warning of the investors of the impact of warning investors, I should say, of the impact the virus is likely to have on their businesses. Air France KLM saying that it expects a financial hit of between 150 and 200 million euros by the end of April. The carrier suspending its flights to mainland China until at least the end of March, a deadline which may be extended further. Those flights represent 5.5% of Air France KLM's passenger traffic. Similar warning today from Australia's Qantas. It's expecting a hit of around 90 million euros to its results as a result of coronavirus. The airline is cutting back on flights to all of Asia due to a drop in demand. It's the equivalent of grounding 18 planes. Staff are being encouraged to take annual leave to reduce the cost to the company. Well, now, while many industries are suffering as a result of people staying at home in China, some sectors are cashing in. Figures published by the Financial Times show there's been a boom in app downloads, up 40% in the first 2 weeks of February. Users primarily downloading games, but also educational apps. And that's boosted the shares of some companies in the sector. Tencent, for example, their shares trading at their highest level in almost 2 years. Well, let's take a look at what's happening on the markets next for you. Mixed signals on coronavirus, of course, with the number of cases declining, but still questions over diagnosis numbers, and that's meant a mixed start to investor sentiment at the start of trading in Europe. London trading slightly up, but Paris and Frankfurt slightly down. Air France shares down over 2% after their results being published. In Asia, the interest rate cut in China helping to boost share prices in Shanghai, up 1.8% a short time ago, but falls in Hong Kong and on the Kospi in Seoul. Now, here in France, the freight arm of state rail operator SNCF is struggling as losses mount and its share of freight traffic decreases. Increased competition from private operators have also taken a toll, as well as the recent transport strikes. Management is set to unveil a new plan to overhaul its operations, as Catherine Viette now reports.
The amount of freight shipped by rail in France has been on a steady decline. In 2000, 57 billion tons were transported by train, and SNCF was in a monopoly position. Nearly 20 years later, that number has fallen to just 32 tons, shared by SNCF and private competitors. This has led to a €150 million loss last year for the state rail operator and pushed it more than €5 billion in debt. The recent transport strikes have taken a toll, but mostly it's a loss of clients to private competitors.
When we used SNCF Freight, we found it wasn't very reliable, less than 70% of the time, but we could count on the private operator 95% of the time.
Deemed too tardy and too expensive, SNCF has announced a plan to save its freight division. The first measure is to add more railway cars to increase the capacity on certain key lines. Then, on the same train, transport more than one type of goods, such as gravel and drinking water. This was not the case before. Finally, SNCF plans to cut 1,000 jobs over the next 3 years to reduce costs. But some analysts say this may not be enough, that the company also needs to abandon unprofitable lines.
Private operators, they're not shy about that. They're positioned only on lines that are profitable. Sometimes for SNCF Freight, it's better to have a few well-filled trucks rather than a train that's three-quarters empty.
SNCF's reorganization into a new structure at the start of the year has put increased scrutiny on the freight division's financial situation.
Finally for me, do you ever wonder what happens to old planes when they're taken out of service? Well, in this case, they're being turned into luggage tags. The first A380 Super Jumbo owned by a commercial airline has been retired, and a German company is marking the occasion by making these tags out of parts of the fuselage. The plane was in service for Singapore Airlines between 2007 and 2017, and the tags made by Aviation Tags sold out within 48 hours. There are more of them on the way, though, as Airbus is phasing out production of the A380 and more older models are set to be retired soon. Eve.
Sold out within hours, and they are like round about €30. I have to say, I'm quite surprised, Stephen. Thanks a lot, though, for that business update. Stephen Carroll with us there.